Hi, and welcome to the Options Doctor Stock Options Trading course. In this section, we'll be covering closing positions. When it comes to closing positions, there's a number of things you want to consider. Number one, is it a single contract or do you have multiple positions? And the example in the video will be covering closing both single and multiple position contracts. The important part about closing positions is you want to be able to make sure you secure your profits or cut your losses. For typical platforms like Webull or TD Ameritrade's Thinkorswim, a lot of the other platforms that aren't as simplified as a Robinhood, pretty much the language you're going to see here is buy to open. When you open an options contract where you're buying a call or a put, and you're going to want to do sell to close that contract position. On the contrary, when you're selling an option position, you want to do sell to open or sell that call or put, and then you want to do buy to close that contract. Okay, so I wanted to make sure I go over that on the more traditional platform. I don't have a video at the particular moment, but it's pretty simple because you have that language there, whereas a Robinhood, it's a little bit different. So I wanted to make sure I included a video here to help you guys be able to properly close these contracts. Okay, so here we're going to pull up our stock or option, which is GE, and there you see I have two contracts. I'm going to go and click on trade and then sell. In the contracts section, you see there's an option for two, as it indicates there are two contracts open. You can change that and do one if you want to scale out. But again, the idea is just to make sure that you know how many contracts you have and how many you're trying to close. There I'm going to do my limit price. Again, we want to try to select the price that we want to get as opposed to just taking what's available in the market, which would have left us at $15, $16 per contract. Here in this example, I'm saying I want to go for $20 or $20 per contract. So again, I have the option to put one contract and scale it out, or I could put two contracts and close them both out, and that minimum credit would then read $40 if I chose to do those at $20 per contract. Be sure to subscribe to the Options Doctor on YouTube at the Options Doctor. Make sure you turn on notifications and like our videos for helpful tips, trading strategies, and new content. Also, follow us on Facebook at the Options Doctor and on Instagram at the Options Doctor for updates and unique content. Also, we would love for you guys to share any of your profit successes with the world as a part of our growing community, and we ask that you send those on the Discord or on one of the social media platforms, and we'd love to share your successes as a testimony to what we teach and how we help to develop new options traders. Lastly is due diligence. As we stated before, you don't want to take anyone else's word, advice, or recommendations without having done your own research first. Our content is intended to be used and must be used for informational purposes only. This is not investment advice. All content in this video is of general informational nature and does not address the circumstances of any particular individual or entity. There are risks when investing. So trading or investing requires risking capital, and we recommend that you do not risk any money that you can't afford to lose. Thank you. We look forward to helping you grow and teaching you about stock options flipping as you embark on this journey in the options trading world.